S&P 500. Here it is. Here are the 500 stocks that go in there. Reason why we're updating it is you can see the amount of distribution on September 1 and 2nd. Once again, we have covered this S&P over and over and over, along with the other sector indices over the weekend. As I scroll down, you can see how nice and red everything is. That means that there's a lot of distribution. It also means that the S&P 500 is about to gap down and gap below. We're going to watch the gap down. Tomorrow morning will be Tuesday. Today's date, 9/5 of 2011. So we're going to be watching that 1150 gap down. Granted that the S&P closed at 1173, down 30 handles on Friday, on September 2nd. And we shot right up there, just like in a lot of the sector indices. And we had a big distribution. We had the buy here and the sell there. The thing that we're going to be monitoring is if we break that last attempted low 4 weeks ago, okay, because this week, second week, third week, the fourth week at the bottom, back above the 200 week, a gap below the 200 week would put some electronic selling into the futures. We'll be looking for a left elbow gap down. If we break through it, then we travel lower. And at some point, we would be looking for a knife hook reversal. We are short term on a weekly level oversold, but you can stay oversold for many weeks. S&P 500 down 30 handles. Tomorrow morning, the holiday will be over. We'll be looking down to a value of 1138.30. And that 1145 handle on the S&P. And if we break below those lows, then of course the body of these two weekly lows are going to come into play. And this is going to be right here on that S&P. And once again, that 1122 on the S&P is going to be a major contributing factor. Here I'm showing a 60-minute chart in the MMT platform, which is quite different than that chart in the background that you see. Here is where we had put a low in the S&P on 826, and we put that low in at 1135.91. That's where that knife hook low was, and we went all the way back up here to where our target was, and that was right below. We got up there in our intraday high level right here. The intraday high level was right there. That's 1230, 1228 was an area of interest. We came up. We have had a complete reversal from those highs. That was the knife hook low on a 60-minute level on 826. Bottom line. We had gap down. We had came in. Tomorrow morning, we closed here. We closed here at 1173.97 on the S&P. So basically, we're going to take a look at how we gap down here. And if we gap down on Tuesday morning on 9/6 of 2001, we're going to take a look at where this gap down is on this S&P. And this is where that 60-minute bottom was. This is where it confirmed that bottom. This is the original bottom over here. Okay, and basically we gap down here to one of these teeny lines, and they're $5.34 per line on a 60-minute chart for Tuesday morning. The key will be, does the S&P hold the intraday, hold this half bar? We're below this half bar at 1165 right now. If we gap below 1165, we're going to come down here to this half bar, and that's going to be 1151.29. That's half of this bar. This bar is where the trend really started off the bottom low. This is 1142.01 on the S&P. The next half bar down is going to be a crucial bar. This was 1134.94 on the S&P. This is where the beginning of this bottom, 60-minute bottom had formed. And ultimately, when we start getting down here to 1127.62, that would be from the distance of where we closed here. That would be the distance of coming down and setting these bottoms in. The key is, how can we close, or if we gap below the 1151.29, this is half of that bar that started on 826 to this reversal. So we're going to be looking at where we get weighted in here at the first level. This is a major reversal bar to the S&P high. Now we're going to come down and test these areas. And the numbers that I gave out are going to be the crucial level on the 60-minute chart. If we gap all the way down in the morning and we have an immediate buy bar like this on a 60-minute, you will confirm it on a 3-minute, 15, and your 60-minute, 15-minute. You'll have that going. You'll have your 3-minute. We'll start it. And what we're looking for is the knife hook low. It comes in, it puts in the low, it takes off, it doesn't look back. Now, on Tuesday morning, we'll be taking a look at what the magnitude of the gap down on the S&P 500 is to these delta lines in this SMF platform. And either they're going to make a market and they're going to do everything that the platform ascends, meaning you come down, you'll start having these diamond pops. See how these diamond pops all the way up in the trend? Well, right now, the diamonds have been closing down toward their low, and the diamonds have been getting lower and lower in the SMF market maker platform, and that's weakness. So when we do confirm a bottom, and we do confirm an up move, you're going to have diamond pops on 60-minute and 15-minute charts, and the diamonds keep ascending in value, okay? And that's what the upside move would look like on tomorrow morning, opening bell. S&P 500 weekly chart is that we're short-term oversold. Here, what it looks like on a weekly, there is a market below down here at different support levels that happened way back over here on 8/29 of 2010 lows down here at 1017. 1062 is a weekly area where we had gotten support back there. So basically, it's standard technical analysis. That's going to be the S&P 500 conclusion.